Welcome back everyone to the Audacious Money Witch channel where we talk about the magic behind the stock market. Okay, so like Nvidia's already sent it, AMD's finally breaking out, and ARM is just, what? Trading at a 40x price to sales ratio. Wild. They're all kind of overhyped right now, no cap. So where's the next easy bag in this whole AI-powered autonomous future everyone's simping over? The answer, fam, is Qualcomm. This is my first deep dive on QCOM stock, and it's legit the first time I'm actually considering copying shares. I'm feeling super bullish. I'm talking within the next 24 to 96 hours, I might just send it. Let me spill the tea on why this is a major buy and why this stock could go parabolic. Qualcomm QCOM, not just your iPhone chip dealer. So QCOM, short for Quality Communications, isn't just out here making chips for your iPhone and Android. Nah, they're actually one of the biggest fabless chip designers right behind Nvidia. This San Diego-based powerhouse legit designs the brains and wireless tech that makes most of the world's smartphones even work. Think of them as the low-key MVPs behind your phone's ability to flex on 5G, crunch data, and run all those sick AI apps. The glow-up is real from phones to future. Qualcomm is in full-on transformation mode. They used to be just the phone chip guys, but now they're diversifying big time into segments that are actually popping off. Smart cars, Internet of Things, and Edge AI. This glow-up is happening thanks to some low-key genius partnerships and acquisitions that are just leveling up their tech game. Their whole business model has two main engines that keep it running. QCT, Qualcomm CDMA technologies. This is where they design and sell the actual chips, like Snapdragon. This side is crushing it, especially with huge growth in automotive and Internet of Things. QTL, Qualcomm Technology Licensing. This is the less visible but super profitable part. They've got like 140,000 patents. Basically, any company that wants to use their tech, like for a 5G phone, has to pay QCOM a royalty. This part has insane 70% margins and barely needs any investment, making their whole setup super robust and low-key impossible to copy. QCT beyond just phones. For years, QCT was all about mobile processors, and yeah, Snapdragon chips still dominate Android and are key for 5G, but now QCT is playing a bigger game. Their automotive division is legit creating solutions that merge connectivity, sensors, and AI for those smart, autonomous cars we're all going to be driving. And the Internet of Things segment, that's everything from your smartphone, cams, and routers to industrial tech and devices that process data right where it's collected, edge computing. These are all segments with massive potential to blow up. QTL, the silent cash cow. Then you got QTL, the licensing unit. It's not flashy, but it's essential. With 140,000 patents, this division just licenses Qualcomm proprietary wireless tech. Every time a manufacturer uses one of their patents, like for a 5G phone, QCOM gets paid. It's a high-margin business that doesn't need constant reinvestment and just keeps bringing in stable cash year after year. Secure the bag. Recent earnings. QCOM is executing, period. In Q2 fiscal year 2025, QCOM proved they know how to execute for real. Their numbers were solid and straight up beat market expectations. Revenue hit $10.98 billion, which is a 17% jump from last year. But it wasn't just about sales. Their profitability was also on point. Net income hit $2.81 billion, up 21% year over year. The real MVP here was the semiconductor division, QCT, bringing in $9.47 billion with a sweet 30% margin. Inside that, their smartphone chip biz, still the biggest, grew 12% year over year to $6.93 billion, and the automotive segment, that thing, popped off, soaring a wild 59% to hit $959 million. Even the Internet of Things business, with all its smart devices and industrial tech, grew 27% year over year, generating $1.58 billion. QTL, the licensing unit, stayed strong too. Revenue was chill at $1.32 billion, with a profit of $929 million. And that juicy 70% margin, it's not going to explode, but it's the stable foundation of the company's financials. Why QCOM is the next big send. Chart talk and valuation. So now you get how Qualcomm makes bank. But why now? Besides the whole stock market and NASDAQ hitting new highs, QCOM just had a technical breakout, signaling fresh upside after months of being stuck. So are we talking about the deepest value chip stock about to go 50% up and hit new highs? The price finally busted through that resistance with conviction, and instead of just dumping, it's now forming what looks like a classic bull flag. This basically means sellers are tapped out and buyers are taking over. QCOM's just chilling right above the breakout level, which is a good sign for a more stable climb. What's really making me hype is how it's staying above that old resistance line. That line that used to be a brick wall, now it's acting as support. If this bull flag plays out, we could see QCOM pushing towards $170 to $180. That's a measured move based on how it broke out. And the valuation, does it even make sense for QCOM to go higher? Absolutely. QCOM is still one of the most profitable tech companies out there, but the market is still sleeping on it, giving it way lower multiples than its peers. This gap between its quality and price is why it's such a fire investment. Its forward PE is only 13.06, which is like 43% cheaper than the average tech stock, 22.80 PE, and even 19% cheaper than its own 5-year average. Even with gap, the PE is just 15, still 46% below its competitors. And get this, even though it's way cheaper than Nvidia and AMD, it actually has a higher gross margin than AMD. Mic drop. Long term, I'm seeing QCOM as a rare combo. Crazy profitability, undervalued multiples, strong cash flow, and a tech roadmap that's perfectly aligned with where the world's going. AI, autonomous, everything. That's why I'm calling QCOM a tactical buy for anyone who's moderate to aggressive with their investments. Especially when there's a dip, it might not 2x in a year, but it's got solid protection, growing dividends, and serious upside. If these new markets keep blowing up, get in while you can.
The digital transformation of the automotive is happening at unprecedented pace. On our last earnings call, we updated the design pipeline to $19 billion. Within about 2 months, we added $11 billion to the pipeline. And it is now $30 billion and really reflects how uniquely positioned the Snapdragon digital chassis is and how we're really creating a platform for the automotive industry. Once you connect the car to the cloud, everything changes. The car becomes a center for services, for distribution of content, for new applications. For the first time, the car companies have an opportunity to have a direct relationship with the car owner in real time. That's what we're focused on, and focus on building a platform that will enable all of those new services, applications, and technology transitions for the car company.
The largest chip companies in the auto industry. It positions us to be the leader here. Today, we are already operating at scale in connectivity and digital cockpit. ADAS, as you'd expect, is in investment mode. We're investing in the chip, we're investing in the software roadmap, and with the Arriver acquisition. Things are going in our favor. The industry trends from an electrification, ADAS, software-defined vehicle perspective, it puts us at an advantage.
This is a very important event for Qualcomm. And I'll say it's probably graduation day for the Qualcomm automotive business as we position ourselves and establish partnerships to be one of the largest automotive providers of technology for the future of automotive. We're winning the digital future of the automotive semiconductor business.